Hi, everyone. Lauren Culp here, President and CEO at CUInsight.com, and I'm bringing you a three questions video interview today with a really special guest. I am very excited to have joining me the Chief Revenue Officer at Securian Financial Group, Matt Bauler. We are going to be talking about post-close debt protection. And Matt, thank you so much for being here, first of all.
You're welcome, Lauren. Great to be with you today.
I know loan defaults right now are quite high, and that's, of course, cause for concern for credit unions and their members, too. And in 2023, Securian surveyed over 2,000 consumers and lending executives to learn a little bit more about the challenges that are facing Americans right now and hopefully how lenders can help. So, my first question for you is, what are some of the highlights from that survey?
Yeah, great question, Lauren. As you mentioned, we found quite a bit of anxiety for Americans making payments in today's environment. 51% of survey respondents were concerned about making loan or credit card payments, and 64% are worried about defaults or late payments negatively impacting their credit score. And the concerns are well placed. Many Americans are living paycheck to paycheck, and one missed paycheck could send borrowers into default. The same survey found the top three reasons for default were reduction in income, an unexpected job loss, or an unexpected expense, such as a needed car or home repair. But it's not just borrowers. These hardships and resulting defaults also impact lenders. That may mean stricter qualifications for loans and credit cards or stronger underwriting guidelines moving forward.
There are a lot of ways I could think about something going wrong and needing an unexpected amount of money for an emergency. In that sort of situation or in any of the others, what are the solutions that you think are available to help some consumers who might be facing these things?
Yeah, we've been talking to many credit unions about debt protection as a great way to protect them and their members. Debt protection minimizes the risks associated with lending by canceling all or part of an outstanding loan balance for the borrower if an unexpected event happens, like death, disability, or unemployment. And this is typically offered at the point of sale, but sometimes it isn't purchased. It could be that the member just wanted to complete the process or felt that the risks didn't apply to them at that particular time, or perhaps they weren't even given the opportunity to opt in for whatever reason. We're now introducing credit unions to a post-close debt protection option that allows members to purchase that coverage after their loan is already in place.
And I'm curious how that works. Can you tell us a little bit more about how the debt protection happens if the loan's already been processed?
Yeah. Instead of having a traditional payment around debt protection tied into their loan, the member would pay via debit or credit card. It's like a subscription model similar to Netflix, where they pay a monthly fee and can cancel that at any time. And actually, the whole solution is digital. So members receive that information about the solution digitally, where they can learn more and enroll online. It's a turnkey offering for credit unions. The outreach, enrollment, and billing are all handled here by Securian. So credit unions wouldn't need to shift away from their existing point of sale offering, but are also able to add this post-close option to cover a wider member base, which really benefits those members and the credit union as well.
That is fantastic. This is a really innovative solution for credit unions to offer to their members. I love hearing more about things like this that can help credit unions really compete with some of the big players out there. Matt, as we wrap up the conversation, do you have any final thoughts for our audience or final asks for our listeners?
Yeah, absolutely. Securian is really committed to delivering innovative solutions in this space and partnering with credit unions to grow the outreach of these programs and the impact of these programs. We encourage you to reach out, seek to learn more and how these options could really expand your offering and protect your member base, as well as providing additional opportunities of protection for the credit union.
That is a perfect way to wrap it up. I'm really excited for more credit unions to learn about this offering. Post-close debt protection is so important. And Matt, I will link in the post here to the Securian site so anybody who's interested can get in touch with you there. Thank you so much for taking some time to chat with me today.
Lauren, it's been a pleasure. Thank you so much for having me.
Thank you. And thanks to all of our listeners for tuning in today to this three questions video interview. And we will be back again next time.